Hello everyone, our topic today is trade discounts. In our lives, discounts can be seen everywhere. For example, now is the seasonal transition between autumn and winter. Walking on the street, we can see advertisements of discounts and promotions everywhere. Why do enterprises offer discounts? Of course, it is to promote sales and recover funds faster. So, apart from the reason of season transition, are there other reasons why buyers can enjoy discounts? Yes. In fact, trade discounts, one of the promotional methods often used by enterprises in order to expand sales and occupy the market. Companies often adopt a promotional strategy of more sales and lower prices, which is what we usually call small profits but quick turnover. That is to say, the more quantity a buyer purchases, the more discounts he may get. In accounting, these discounts are called trade discounts. So, as an accountant, if the company sells goods through trade discounts, how should we handle the accounting? Let us now understand the basic concepts and accounting methods of trade discounts. Trade discount refers to a deduction made by a company on the price of a commodity based on market supply and demand conditions, or for different customers when the commodity is traded. In other words, trade discounts are discount given for large purchase quantities. It is actually a promotional method taken to promote the sales of goods. Generally, trade discounts are expressed as a percentage, such as 20%. In addition, the common commodity discounts we see, such as 30% off, are equivalent to a 30% discount, which is also a trade discount. Now that we know what a trade discount is, as an accountant, if our company sells goods using a trade discount, how should we handle the financial situation? When issuing invoices, should we use the original price, the discounted price, or is it both? With this question, let's check the provisions of accounting standards. According to the provisions of Enterprise Accounting Principle Number 14 Revenue, if the sale of goods involves trade discounts, the amount of sales revenue should be determined based on the amount after deducting the trade discounts. The amount of sales revenue recorded in the enterprise's accounts should be confirmed based on the actual sales amount after deducting sales discounts. That is, the main business revenue should be credited with the entire net sales amount after tax, and accounts receivable or bank loans should be debited with the entire net sales amount. And taxes payable, value-added tax payable, output tax should be credited with the difference between accounts receivable and product sales revenue. This set of accounting standards actually tells us that trade discounts should be used to recognize revenue and calculate value-added tax based on the discounted price. However, the tax law has more detailed requirements on the issue of invoicing. For trade discounts, the current VAT law stipulates if the sales amount and discount amount are separately stated on the same invoice, the balance after a discount can be used as the sales amount to calculate VAT and corporate revenue tax. If the discount amount is invoiced separately, regardless of how it is handled financially, the discount amount cannot be deducted from sales for the purpose of calculating value-added tax and corporate revenue tax. So, how should we handle the accounting? Let's learn the accounting treatment of trade discounts. For an example, on December 1st, 2015, Company A sold 100 items of goods to Company B on credit, each item originally costing 1,000 yuan. Since it was a bulk sale, Company A agreed to give Company B a 20% trade discount, and the value-added tax rate was 17%. The goods have been shipped, and the payment has been deposited in the bank. Requirements make relevant accounting treatment for Company A. This is a typical trade discount. The reason for the discount is that Company B purchased in bulk and therefore enjoyed a 20% trade discount. Now let's handle the account for this business from the perspective of Company A. If the discount amount is invoiced on the same invoice as the sales amount, the accounting treatment would be as follows. First, the money has been deposited in the bank, so debit, bank deposit. And, according to tax laws, if the discount and sales are invoiced on the same invoice, the revenue and value-added tax can be calculated based on the amount. Therefore, the revenue is calculated based on the discounted price of 80,000. That is, 100,000 multiplied by 80% equals 80,000. Value-added tax calculated based on the discounted price. 80,000 multiplied by 17% equals 13,600. But if we change the approach and put the sales amount and discount amount onto separate invoices, is that possible? The answer is yes. But the impact on businesses is different. Since two invoices were issued, according to the tax law, the revenue cannot be calculated based on the discounted price, but on the original price, which is 100,000. The value-added tax can only be calculated based on the original price. 100,000 multiplied 17% equals 17,000. Let's compare the two methods together, and it will be clear at a glance. From the table we can see that the main impact of the two approaches is the different amounts of VAT. The output VAT for the same invoice is 13,600 yuan. The output tax of VAT for issuing two invoices is 17,000 yuan. Obviously, it is more beneficial for the enterprise to issue one invoice. We will stop here to discuss trade discounts. It is a common promotional method, and we need to master the accounting treatment of trade discounts. It is especially important to note that when a company uses trade discounts to sell, remember to put the sales amount and discount amount on the same invoice. Otherwise, it will cause an increase in output tax.